that gives us an advantage, an unfair advantage that other mining companies will not have in the long term.
What's going on, guys? This is Aaron from Departures Capital, and we're here with Harris Basit, CSO at Bitdeer Technologies. A pleasure to have you on today, Harris. How are you doing?
Thanks, Aaron. It's a pleasure to be here. Hello to everyone.
So it's a pleasure to have you on the channel today. Could you start by giving us a quick introduction to Bitdeer Technologies? Tell us all about the company.
Sure, Aaron. I'd love to. So Bitdeer Technologies is one of the few technology companies in Bitcoin mining. And we are a full-service company that caters to Bitcoin miners. We cater to large miners, and we provide a whole suite of services and products. So we're probably the most vertically integrated. We have 25% of our people focused on R&D, and we're located throughout the world, pretty much. We're headquartered in Singapore. We have several operations in the US, including Texas, Tennessee, Washington, Ohio. We have multiple locations in Norway, and we have another location in Bhutan. We operate about 900 megawatts of mining centers throughout the world, and we have plans to bring online another 1.1 gigawatts of mining centers within the next 18 months to 2 years. We're the only publicly traded mining company that is making its own Bitcoin mining rigs. We're focused on improving the energy efficiency of mining, and we provide everything from software to containers to the mining rigs. We design the silicon and everything else that's required to do Bitcoin mining. So basically a one-stop shop, full service, and also have very significant mining capacity. One of the probably the 3 or 4 largest mining companies in the world.
So given Bitdeer's global presence and your focus on R&D, how do you see the company's position in the competitive landscape of Bitcoin mining, especially with the recent announcement of a new chip to compete with industry giants like Bitmain?
Yeah, thanks for bringing that up. We're very excited by our recent announcement of our new chip that just was tested. And we really think this is our way of making a strategic difference and having an advantage over other Bitcoin mining companies to continue to be more vertically integrated and to be able to control our destiny in a much more powerful way than the traditional mining company can. 80% of the cost of the capital cost of mining Bitcoin is in buying the mining rigs. And so we will have that much more under our control. Often these costs of mining rigs goes up dramatically during bull runs in Bitcoin, and that dramatically decreases the revenue and the profits that Bitcoin mining companies can make during the bull run, which is where they can make a lot of their revenue typically if they had access to mining rigs. So having access to a high volume of mining rigs at a reasonable price, especially during bull runs, and then having the most efficient mining rigs, those are really the keys to Bitcoin mining. And we think we've set ourselves up in a very strategic way to have better access to the most efficient mining rigs at a lower cost in a more timely manner. And that's basically, what mining's about. So I'm very happy with how we've positioned ourselves. It's going to take a little while for the whole thing to play out. We are heavy into R&D, and this is our first chip. It's great and very, very competitive with the market. But we're not stopping there. We're going to keep doing more R&D and develop advances that I think will continue to surprise and benefit the Bitcoin mining industry.
I love to see companies controlling variables and input costs. That totally makes sense to me. So as a CSO, how do you envision leveraging Bitdeer's vertical integration and in-house R&D to not only enhance internal operations, but also potentially disrupt the market through chip sales?
So just a mild adjustment there. We're not just going to be selling chips, or we're not going to be selling chips. We're going to be selling full systems, right? The mining rigs themselves, or colloquially they're called ASICs, but It means the entire the mining rig. And so, we're both going to be using our own mining rigs, and we're going to be selling them. And that gives us the vertical integration when we use them ourselves. But selling mining rigs is actually a good way to scale. And obviously, if you look at the market cap of a company that makes mining rigs, especially the larger ones like Bitmain, often that market cap can be as large as the entire, all the public mining companies put together. And so there's a lot of benefit to having the ability to manufacture your own mining rigs, provided they are really efficient, right? And they are at state of the art, or you're leading the state of the art, which is our intent. Our intent isn't to be another mining rig manufacturer. It's to be the leader in this space, to have the most efficient rigs, to have the highest volume capacity capabilities. And so, we are really gunning for a undisputed leadership position in this space.
That's an awesome goal. So Bitdeer's approach of building in-house containers for faster and cheaper hash rate ramp up is intriguing. How does this strategy align with the company's long-term goals, particularly in light of the current market dynamics dominated by Bitmain?
So, I mean, the containers are important, right? And of course, we make several different types of containers. We make containers that are air-cooled, containers that are immersion-cooled, and containers that are hydro-cooled. We make containers that are good for hot, humid climates, like in the Middle East, where the normal containers don't work. And so we have this capacity, but we also are able to make these containers at a much lower cost than others. And so our cost per megawatt is only about $140,000, which I think is the lowest in the industry. Now that excludes any substation work that might need to be done, and of course the mining rigs inside. But I mentioned earlier that 80% of the capital cost is the mining rigs. Well, the other 20%, you have to control those costs too, and we have among the lowest in the industry. And that's because we're making our own containers, as well as soon to be our own mining rigs. So that's really the vertical integration that we're talking about. And then, of course, we have some of the lowest cost energy of any of the public mining companies. And we're enhancing that both in Texas and Ohio, as well as in Bhutan and Norway and Washington State and Tennessee. So we have some work to do there to make sure that we expand in the areas where the energy is the lowest cost. And we think we have that well in hand as well. So that's really the full vertical integration, right? From the energy all the way to the mining rigs.
So the concept of fractionalizing hash rate through your cloud product seems to offer high margins. How do you plan to capitalize on this unique offering, and what role do you see it playing in Bitdeer's growth trajectory?
Yeah, so that's a very interesting product, and it does, as you mentioned, have our highest gross margins. And it's a product that allows anybody to quickly get on our website and purchase some amount of hash rate for some arbitrary amount of time, anything from 1 month to 3 years, and anything from 1 terahash, which is like 1% of a mining rig, to many petahash, which is several or even hundreds of mining rigs. And so this flexibility of getting on and saying, hey, I want to purchase hash rate for 3 months or for 3 years, is actually, we're the only ones that have really been able to scale that to any size. And it provides the customers a lot of benefit, but it provides us quite a bit of benefit too, in that we are able to adjust these products, the availability of these products, so that much more is available when the sentiment for Bitcoin is much higher. So when there's a bull run in Bitcoin and prices are high and a lot of people are trying to get into mining, we can lock in those prices and that high sentiment over a much longer term. And that allows us to have much less volatility in our own revenue and smooth out that revenue and earnings for ourselves, as well as give our customers significant benefit in being able to have a lot of flexibility. So the reason that the gross margin is high there is because we typically sell much more of that product when the sentiment for Bitcoin is very strong and when the prices are high. And so that gets locked in. And then as the bull market recedes and we get into just sort of normal markets or even a bear market, we have still retained a lot of those higher prices for Bitcoin into this product.
So coming out of a difficult 1 to 2 years, a lot of investors have put a lot of emphasis on balance sheet. So given Bitdeer's strong balance sheet and minimal debt,
peers, as a multiple of enterprise value to adjusted EBITDA, we're certainly much lower than others. And I think there are some reasons for that. I mean, I don't know what the absolute reasons are, right? The market makes decisions and we all just assume what those decisions, what underlie those decisions. But I'll throw out a few things that we think are there. One is we went public much later than most of these other companies. So we've been public for less than a year now. We're just coming on 1 year in April. And so we've had much less marketing to investors. Our analyst coverage has been, pretty low because of that. Until recently, we've only had one analyst. Now we have two. Pretty soon we'll have 5 or 6. So that gets the message out there to more and more investors. I think that's part of it. I think there's aspect of it that, we've had some significant amount of shareholders who have been with us for a long time, that were with us when we were a private company as we split off from Bitmain. Some of those shareholders are seeing liquidity options for the first time in a few years because we just went public, and there's a little selling pressure from them wanting to get some liquidity, though most of them are still holding. The vast majority are still holding. So I think there's some of that. Our float has been low, and that limits how much institutional investors can get in. But that's being addressed to our the total number of shares that we have available are increasing. So there's just sort of these growing pains of being a newly public company, and then also that this strategy that we have of making our own Bitcoin mining rigs is really something that we've only just started talking about. So I think there's the advantage of being undervalued is that there's a lot of growth in our share price, I think, ahead of us. And so we're looking forward to that. And, we think it's a great buy as a stock right now.
Definitely, I look forward to covering it. So as someone with a heavy semiconductor background and leadership experience in developing AISCs, how do you believe your expertise positions Bitdeer for success in challenging the dominance of existing players in the market, such as Bitmain?
Well, I mean, so it's really the R&D part of that, right? I mean, my background is deep R&D, developing new ways of doing things with semiconductors. Sometimes gallium arsenide, sometimes silicon, sometimes something else. But it's the goal is not to just develop chips that are the same as everyone else's, right? Mm-hmm. And this architecture that everyone has been using since 2014 for Bitcoin mining chips is pretty similar across everyone. And it was developed back then and hasn't really been changed very much. Chips have been getting a lot better over those years, mainly because of improvements in the manufacturing process from TSMC. Our first chip is, a really good implementation, a very good implementation of that architecture. But we are also working on advanced architectures that will allow us to make a dramatic improvement in the energy efficiency of the future of Bitcoin mining chips. And that's part of my job, is to bring that R&D into real products. And we think, that we have some really interesting opportunities there that will make a huge difference in the amount of energy that's required to mine Bitcoin.
Well, thank you for all the information, Harris, and definitely a unique company. I love learning about your story. I look forward to having you back on for more.
Thank you, Aaron. I really enjoyed it.